Hello again. Welcome to another episode of the Uranium Market Minute. Today is Monday, February 14th, and this is episode number 77. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Before we get into it, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Thank you again for being here. Really do appreciate all the support, and thank you for listening in an ongoing basis. I definitely notice it. I read all of the YouTube comments. I reply to as many as I can with the limited time that I have, but I do read them. So thank you. I appreciate the levity. I appreciate all of the feedback. And again, another somewhat choppy day in the markets today. Uranium holding up relatively well for the most part, but still kind of low volume chop here with a lot of broad market concerns, particularly around the situation with Russia and Ukraine and around inflation, Fed interest rate raises, et cetera, et cetera. We'll get into it and check out the charts in just a moment, but a couple pieces of housekeeping I wanted to mention. First of all, we are now offering a quarterly membership option. We've only been offering annual options up until now. If you'd like to get an idea of the type of content we put out, click the link in the description below and you'll get a free sample of a previous month's newsletter. Also, members, of course, have access to our members-only webinars, which we do once per month. It's about a 2-hour deep dive into the sector, into the companies that we follow. And as always, this coming week, we will have one of the CEOs of the companies that we follow. And that is going to be Thursday, February 19th, is our next upcoming members webinar. We have usually a pretty big turnout. And it's always a good time and get really geeked out on this stuff. I really like doing these short 10, 15 plus minute videos just about every day for the Uranium Market Minute, but it's always refreshing to take a little bit more time and dive a little bit deeper into the nuances of the sector because it can be a pretty complex thing to discuss. So if you're interested in our service, but prior to now did not want to commit to a full year, we are offering that quarterly membership option. And again, click the link in the description below so you can get an idea of the type of content that we put out for our monthly newsletter. The second piece of housekeeping I want to mention is that I will be presenting and I'm very honored to be a part of the Uranium Bootcamp that is being hosted by Rick Rule and Sprott. Very excited about this. This is going to be on Saturday. I believe it's March 19th. If I recall correctly, let me look at my calendar as I'm saying this. Yes, the 19th of March. So really looking forward to that. And honestly, I'm going to be shoulder to shoulder with really the brightest minds in the sector. So I'm unbelievably humbled and very much appreciate being invited to speak at this digital conference. And there's some really big players in the space that will be speaking. So I will be attending the event as well. Just waiting on bated breath to hear from some of these folks, and just very, very excited to be a part of that. So I'll put a link in the description below for that event as well. You can check that out, and I definitely will be there, obviously, and I hope that you will be as well. All right, before we get into the charts and the mailbag section, let's run quickly through the daily scoreboard here. So the price of uranium up another 25 cents or so, 43.25 a pound mid-market, slightly ticking up since it bottomed out in late January, and about $1 above where it ended the year. Seeing the spot price definitely stabilize here, and the volumes have fallen a bit, besides the fact that Sprott's buying has ticked up since the beginning of the month. On Friday, Sprott raised 5.3 million in new capital and they purchased another 300,000 pounds. So that puts their year-to-date total at 4 million pounds of U3O8 purchased, 204.8 million in capital raised since the beginning of the year. They continue to just chomp away at that above ground inventory and likely still working through some unwind of the carry trade. I've mentioned that in previous podcasts. I'm not going to get into that today. Short-term liquidity based on a backwardated market in terms of the forward curve and the cost of uranium, the present value versus the midterm value. So a lot of the spot liquidity right now is happening from that carry trade being unwound. That has a limited amount of pounds. We're not going to speculate on how much, but either way, Sprott continues to work through that. That is very, very good to see. On Friday, they closed at a slight premium to NAV, barely above NAV, 0.23%. Now the trust today is traded down a tiny, tiny bit with spot moving up. So most likely they did not raise any money today. If you are new to this channel and you're new to the uranium investment thesis, The Sprott Physical Uranium Trust essentially can issue shares through something called an ATM, an at the market financing vehicle, where they can issue shares into the open market to raise cash to buy physical uranium. However, they only issue shares when they're greater than a 1% premium to their net asset value. The net asset value essentially is the pounds that they are holding in their inventory multiplied by the spot price. So if the trust is trading at a greater than 1% premium to that, and why 1%? Because they take a 1% management fee when they purchase physical uranium. So whenever they're trading at a greater than 1% premium to NAV, they are issuing shares into the open market. CEO John Ciampaglia stated to us that typically on a high volume day, they won't be more than 50, maybe 60% of the total traded volume in terms of selling shares into the market. So that's the way that this vehicle works. So they aim to hold physical uranium. I've actually had a number of mailbag questions, which I'll just address right now since I'm talking about the Sprott vehicle. What's to keep them from selling to the market when the prices go to the moon? Well, this is a trust. The value that this vehicle is providing is in the physical uranium that they hold. This is not a trading vehicle. It is not set up to trade uranium. It is set up to buy and accumulate uranium. And the holding of that uranium is what gives this trust its value. It's a way to, it's a vehicle to provide high liquidity to investors who want exposure to the commodity itself, because most investors are not typically going to go out and buy physical uranium themselves, even though they technically can and just keep it held at a conversion facility, which is what Sprott is doing, right? They'll buy it at any one of the 3 primary conversion facilities and just hold it there on their books. So that's the purpose of this vehicle. Now they have minimal management fees that they make money on, of course. So they're going to make, when at a certain valuation, they'll make north of, 10 million a year simply on management fees. And that's and likely much higher than that as the vehicle continues to grow. However, when you're talking about Sprott, that's not a lot of money, right? So what else is their incentive? Well, not only do they provide this highly liquid vehicle and they make money on those fees, but they also know that this vehicle's, mechanization really in the market is what will help to propel the spot price of uranium up. Therefore, also moving up the ETFs and the underlying equities across the space. A rising tide lifts all boats, right? And so Sprott as a company is highly likely to recommend not only this vehicle to their high net worth investors, but also URNM, which within a couple of weeks will be the Sprott Uranium Miners ETF. And of course, Sprott also has investments across the space. They participated in a number of private placements and financings. And so not only do they have their own exposure already out in the uranium market, and they continue likely to accumulate not only for their investors, but for themselves positions in these equities. When the spot price moves, all of this moves as well. So it's sort of this feedback loop, this flywheel effect, if you will. So that's really what it's all about for them. So they didn't create this vehicle to trade uranium. And I mean, just to quote John Ciampaglia, the CEO of Sprott, Sprott is essentially as a vault. So they are buying and holding uranium. You can consider them at this point essentially to be an end user for the uranium that they are purchasing. So finishing up on the Sprott details, they are now sitting on 52.8 million in cash on the balance sheet. They've raised over 1.2 billion in new capital since August of last year. The NAV of the Sprott Trust is now just under $2 billion, and they started out at 600 million last July when they took over Uranium Participation Corporation. So we talked last week about what we noticed that URA had reported an 11% position in Sprott. That turned out to be an error. It looks like the correct weighting that they currently have in the Sprott vehicle is about 6%. We'll see if that fluctuates any more further. We had estimated, as I mentioned before, somewhere around the 7 to 10%, 10% being what we understood to be the limit for a trust. So now we're seeing a 6%. That makes more sense, although relative to, let's say, their yellow cake holding, which is a much smaller vehicle at this stage, we expected it to be a bit higher. We'll keep an eye on it and report further. So now that they've raised 1.2 billion since August, they have another 2.3 billion available in their ATM. All right, turning to the ETFs, URA issued another 430,000 new shares on Friday. URNM did not issue any new shares. I did mention in last week's Uranium Market Minute that we believe that the share issuance has been greater from URA due to the higher options volume. specifically with a higher call options volume. So when a market maker will sell a call option to an investor or a trader who's buying that call, that market maker cannot be directionally short. So they will buy the underlying common stock. So actual options volume, especially, I mean, it works both ways, right? But options volume, when there's a lot of call options being taken out, there's actually a lot of pressure on the underlying common stock, and therefore that will lead in some cases to more share issuance by URA. That's what we believe we're seeing. Either way, the combined outstanding share counts of the two ETFs are now there at all-time highs. So what we've seen since January 1, URA outstanding shares increased by just over 5 million, URNM 750,000 shares. So that's a total of 145 million in mandated buying since the start of the year. The ETFs continue to see inflows. All right, we continue to believe that that has a lot to do with some smart money positioning here. The combined AUMs of the two ETFs is just under 2 billion, 1.95 billion. All right, trading action. So we had a nice day last week, followed by a decent day on Thursday. So Wednesday, when Cameco announced the restart of MacArthur, the market loved that news, especially around the long-term contracting numbers that Cameco reported. 40 million pounds signed into long-term contracts in January of this year alone, just huge numbers. And then we saw a weakness in the sector coming from inflation reports. The CPI reported 7.5% inflation, which was higher than the market wanted to hear. The broad market weakened. However, uranium held up relatively well, trading down a little bit today. But let's go ahead and take a look at the charts. URA trading down just over 2% today on the day. Not a great looking day. However, we are seeing declining volumes on this pullback. That's, of course, something that we like to see. We always appreciate increasing volumes on the way up, decreasing volumes on the way down. When the selling volume outpaces the buying volume, that's obviously not a good sign. And that isn't what we're seeing here. So that's definitely good. Still holding above, barely above that 20-day, 50-day, 20-day, still falling pretty steeply, although the 50-day is trying to sort of figure out a bottoming pattern here, just below the 200-day, still well above that rising trend line. Kind of a choppy looking chart. I wouldn't say this is overall bullish or overall bearish here. And I think that we're going to need to see some volume rising above that 200-day moving average before I really feel like this is back into bullish territory. However, of course, this is a fundamental investment for us anyways, and we treat it as such. We buy on weakness and we hold for the long term. So either way, it's nice to see this recover a bit from the lows of last month, and we'll see how this thing moves going forward. Not really a whole lot of clear direction at this point, although the indicators are recovering a bit. Over the RSI turning back down, MACD starting to already turn down again. Wouldn't be surprised if we see a retest of this trend line going forward in the next couple of weeks. Sprott Physical Uranium Trust down 0.29% today. Negligible volume, likely trading at a slight discount to NAV, considering that we saw an uptick in the spot price. Still, this chart is beautiful. We continue this winding chop range bound for many, many months here. We do believe that this chart pattern will eventually break out to the upside, especially considering the fact that this chart essentially is following the pattern of the movement of the spot price of uranium. Yes, they do trade at sometimes extreme premiums and discounts to NAV. They were greater than a 20% premium to NAV back in September. They've been as much as a 10% discount to NAV. I believe that was back in December. But essentially this is reflecting the spot price of uranium. We think that the likelihood of this pattern concluding to the downside is very low. There doesn't seem to be a lot of downward pressure on the spot price of uranium. And that's obviously a good sign for the sector. The equities are going to do what the equities do, but the underlying commodity looks very stable in price currently. That's something that we like to see, at least during this time of what we consider to be sort of a continuation of an accumulation period for the equities. All right, mailbag section. So I got a lot of comments from during the previous video because I did not discuss what actually was a pretty big piece of news on Thursday, or actually I wasn't in the office on Thursday, but on Friday I didn't discuss it. And I think that it's worth mentioning. And that is the fact that President Emmanuel Macron in France came out on Thursday announcing that France plans to build 6 new nuclear reactors with the potential of adding an additional 8. Now, these new reactors for France, they're called EPR2 reactors. These are very, very large reactors, 650 megawatt reactors, pressurized water reactors. These things are monsters. France has over 50, I think it's 55, 56 reactors. I don't remember the exact number currently operating. Many people don't know this, but France is actually the largest exporter of electricity in the world. So in my opinion, what we're seeing here is not only France has greatly benefited from being 70% nuclear. Their grid is 70% nuclear. They have the cleanest energy in all of Europe, and they are a major exporter, as I just mentioned. So I think that they're seeing the writing on the wall in terms of some of their neighbors' energy policies and the opportunity for them to be able to continue to export energy to some of the countries that are going much more greater into renewables, more specifically Germany. So France is really, they're really calling their shot here. Also, they're exploring SMRs, and these reactors that are just announcing that they plan to build, the 6 new EPR2s, would be online somewhere in the 2030s, right? So that's not immediate demand, of course, but in conjunction with this announcement, he did mention that they do not plan to do any further early retirements of their current reactor fleet. They do have, I believe it's 8 reactors operating currently that were built in the late 70s and early 80s. These were the, what are they called? CP1 and CP0 reactors. They're high 800, low 900 megawatt per year. They're smaller reactors. Those are the ones that are most likely to be shut down at some point this decade. However, the way that France operates is they look at the series of reactors that are the similar type of design built during a similar time frame, and those get reviewed every 10 years. Okay, so these should be up for review later on in the decade. So for the time being, they're up and running. And but still, Macron is basically saying they're going to do everything they can to continue to extend the lifespan of these reactors. Now that has implications for this market. I was speaking with a fuel buyer last week during my trip, my boots on the ground trip, and this gentleman operates a nuclear reactor in the south. I'm not going to mention his name or the company, but their reactor was actually covered. They're covered with their fuel needs out to the lifespan of the reactor. I said, oh, okay. Well, when is the reactor scheduled to shut down? He said in the late 2020s. He did specify the year, but I'm not going to mention that for the sake of exposing this particular reactor or this person. So late 2020s. And I said, oh, that's interesting. So what is it looking like for you guys? Do you think that that reactor is going to get a life extension? He said 100%. So there's, built into these supply and demand models, not only the ones that we would create, but the ones that, WNA or UXC or any of these industry players, you have to base these on the conservative estimates for the lifespan of the reactors. So you're planning out and looking into the future based on perceived supply and perceived demand. And, a number, you might take into account the location of that particular reactor and the likelihood of it being extended, the lifespan being extended. But there are many, many reactors globally that have planned shutdowns this decade that will get life extensions. And so that's going to have a really big effect going forward on this market that we are invested now. So, you might cast doubt saying, oh, what does this matter that France is announcing that these things won't be, drawing fuel, they won't be actually acquiring fuel, let's say, for the initial startup on these reactors until the early 2030s. That's not going to make any difference for me in my investments right now in 2022. It's like, well, not exactly. This is a signal to the market, not only to the uranium market, the nuclear fuel market, but to the investing market as well. The second largest producer of nuclear energy is saying they're building more and they plan to extend the lives of their existing fleet. This is a really big deal. So we're very pleased to see this, obviously. And of course, we're pleased to see that the US has announced a major amount of funding. I believe it was $6+ billion for the support of existing reactors in the States as well. Now, of course, we have reactors like California's Diablo Canyon that is slated to be shut down in 2024. I'm not holding my breath for that to be extended, but there's increasing pressure politically and otherwise in the state of California to keep that reactor online. It's a huge, I believe it's 10% of the entire grid of the state, and it's something like 30% of the carbon free energy production in the state. And California has a ton of solar. So hopefully we'll see some growing support as we get closer to that shutdown. But either way, there's a lot of other reactors that are on the chopping block in the States over the next 10 years, and many of those will get extensions, especially because of this new funding program from the Biden administration for the existing reactors. All right, I'm going to leave that there. I will see you guys tomorrow and hope you all are well. Take care and cheers.